Yesterday, the market found out that inflation in the United States had accelerated in March above market expectations. The US CPI surpassed the target level of 2% on year. That could assure the Federal Reserve to revise monetary policy and began the cycle of raising interest rates earlier than the regulator had pledged. At the same time, the US economy is not quite ready for such crucial changes in monetary policy. In the second half of this week, investors will get to know other metrics that will shed light on current conditions in the top global economy and also in advanced economies. The data will certainly impact on trading sentiment in financial markets. On Thursday morning, traders will turn attention to the data on Australia's labour market. The unemployment rate is expected to continue going down, thus confirming that the economy is firmly on the path to an economic recovery in the wake of the pandemic shocks. The number of jobless people is getting lower, while the number of employed citizens is on the rise. The last survey looked much stronger than expected employment growth. Analysts had projected 30,000 new jobs in February, but actually the Australian economy created 88,700 jobs. The forecast for March suggests 35,000 jobs. If the prediction comes true, the Australian dollar will appreciate in response. The Aussie has already gained ground amid the weaker American counterpart. The US dollar will be able to snap a losing streak on Thursday evening in anticipation of another upbeat weekly update on the US labor market. The Labor Department is likely to report a lower number of both initial and continuing unemployment claims for the previous week. However, investors will hardly respond to this publication because they will shift focus towards a report of major importance on retail sales, which is due in the same time. Retail sales are seen as an accurate barometer of economic conditions for the United States. Indeed, consumer spending accounts for almost 70% of the US GDP. In other words, it's essential to monitor dynamics of retail sales. According to the consensus, analysts foresee a surge in consumer activity in March following muted consumer spending in February amid an abnormally cold winter as well as blizzards in Texas and other southern states. An annual rate of retail sales is likely to stay flat at 6.3%. That is viewed as a very positive factor for the prospects of the US economic recovery. The logical response from the market is appreciation of the US dollar. On Friday, market participants will find out another excuse for optimism as they will be encouraged by strong GDP data from China. The second largest global economy is expected to grow 1.5% in the first quarter of 2021 sequentially. But the annual pace of economic growth could be a stunning 18.3%. China's economy is picking up steam with the confidence this year. China's national output climbed a modest 2.3% for the whole 2020, the softest pace of annual growth for more than 4 decades. The welcome news on positive changes in China will certainly boost appetite for risk and propel a rally of risky assets, for example, the Australian dollar. The Aussie dollar could find extra support from a report on China's industrial production that can also impress with a straggling expansion in March. Hence, the Australian dollar will receive a boost, being the currency of the key commodity supplier to China's industry. During the European trade on Friday, market participants will turn attention to inflation data for the Eurozone. It will be revised print for March, so the information could have been already allowed for the euro's value. However, if the final score differs from the flash estimate, this could be the reason for the year's gyrations. You were watching Forex Trader Calendar on InstaForex TV channel with me, Kate Tikhina. We wish you profitable deals and have a nice trading with InstaForex.